welcome back. It was a 34% growth in net profit by Bank of Baroda. Let's hear what the management had to say. Vijay Iyer, my colleague, is having a conversation with PS Jayakumar, MD and CEO of Bank of Baroda. Let's cut in.
We have with Mr. P.S. Jayakumar, MD and CEO of Bank of Baroda. Mr. Jayakumar, thanks for sparing your time and speaking to Business Television India.
Thank you very much.
Indeed, an interesting quarter. The merger process has got completed and perhaps in a record time, which is always a challenge. How do you see this, the whole experience, and indeed this time balance sheet numbers is for the first time the merged numbers which have come in?
So as far as the amalgamation process of the three banks is concerned, it has gone on quite smoothly, and we can give many reasons for it, but in general I would think the biggest contributor of a good process has been that employees with giving, ignoring, or rather whichever be the predecessor institution, have treated each other well, and there is generally a sense of all of us coming together, so that whole process has gone through. But that's one aspect, and important, but one aspect. The real benefits of merger comes through synergies, and we just started that exercise. We are making some good progress on the technology side. We have a fair sense around the branches, the ones on which we need to optimize. We clearly have a good sense around premises we don't need. Activities which we should release more people, for example, audit department and many of the staff functions as you put together, so there will be more salespeople. All of those things are reasonably well identified, but now we are in the process of executing to them. So quarter over quarter we'll begin to see first the actions that are part of this, getting the synergy, and the outcome of the synergy itself.
If I could ask you, in terms of the full synergy, as you're rightly pointing out, it would be a couple of more quarters before we see the full realization in terms of the bottom lines, or
it'll take 2 years. It'll take up to 2 years, primarily because the technology element is a more long drawn process around it. And let's hypothetically assume, let's take a case where we are merging two branches because they are near each other, and then we use the expense of saving from one branch to put into a new branch and get returns on that. That process again has its own lead time. So I would think we should start giving a 2-year framework for the whole thing to play out. But it's not all of it is happening at the end of 2 years. Every quarter we would see some good progress happening.
So coming to the numbers, indeed things are looking pretty good at where things stand. How do you see this fiscal coming quarters in terms of the bottom line, and as far as the NPAs? Clearly things are once again looking much more under control.
So I will try to explain the results in the following manner, that the growth of on a balance sheet basis is somewhat subdued at 6.4, but the reason for that is the BOB portfolio grew by 15%, but if you know, in last March, April, Dena Bank went into a PCA, and so the balances started coming down. So the June month versus the quarter year-end date, there has been a 14,000 crores kind of reduction. That's on one side. So if you kind of start Xing it out, I think the growth story looks okay. The cost of funds story is that the differences in the current account ratio, CASA balances of each, and the dependence each had with respect to the bulk deposit, those things now get leveled off on account of the large liquidity that exists from Bank of Baroda, and so we should start seeing that. I think as far as the NPA is concerned, as far as the portfolio is concerned, the real concern is that while the slippage numbers, etc., are all consistent with the prior quarter, the question we keep asking ourselves is, why is this slippage number, the watch list number, is exactly where it was last quarter, which essentially means whatever has been flowed in has also meant that some other new accounts have come in. Well, that's the part that we are trying to address. I'm hoping that in this quarter and at the end of this quarter, that amount of flow, incremental flow, will start slowing down, and I would also expect that the NCLT and the recovery process to play out. So broadly speaking, I'm hoping we're going to be close to a net slippage close to zero, and then we put over that the amount of provisions we would take. We should see a reduction in the net NPA number from the current number of 3.8 and 3.9 more closer to a sub 3 number.
And that's the wider range that you see it would be before it completely settling out in a couple of quarters.
Yes, I think it will start gradually concerned. The other thing I want to mention, so that it's fairly clear in what we say, is that our watch list portfolio is around 16,000 odd crores. One has to assume 70% of this will flow, whether it's this quarter or the next quarter or the following year. So if you take that into account, we are embedded flows around 12,000 crores. So there's a lot of work we need to do on the recovery side to recoup those flows and make sure that our net slippage numbers are somewhat contained, and in any case does not exceed the amount of provisions we take, so that the net NPA number by itself starts coming down.
And so on the other hand, the whole expectation of the industry as a whole is that the recovery also the pace might increase in the coming quarters on NCLT1, and of course the ICA now finally taking a shape. How do you see this panning out?
I would tend to agree with those assumptions that are there, but one of the things I would urge a little bit of degree of careful consideration is the resolution of the issue is not the same thing as getting back the money. You probably are going to get 30, 40, 50% depending upon the quality of the asset.
As a banker, that's
the quality of the asset. So yes, the absolute net NPA will come down, the recoveries will be there. The good thing is the provision coverage ratios are fairly strong, and so the effect on P&L is probably somewhat muted. That's the best outcome we can expect to happen.
And from Bank of Baroda perspective, so how do you see the ICA? Any number of cases that have already been signed?
I think we're working wherever we are as a part of the consortium, and the ICA program is there. We are participating. My recollection is we have signed up to about 12 accounts for ICA. But from our side, we are supportive of the process, and we would like to engage and get our commitment done very, very quickly to the request for the ICA.
Shri P, if I could ask you in terms of the sector as a whole, and of course Bank of Baroda specifically, how do you see, what is the exposure of BOB at this point of time when it comes to the NBFCs and HFC sector, because that has been an area of concern for the whole of the first quarter for the industry?
I think these concerns are valid based on the fact that a couple of large accounts have kind of slipped, so to say, and then people worry whether the same problem exists elsewhere. Our overall exposure to the non-bank finance company is around 100,000, 1 lakh crore, but it's distributed over 157 companies, and there are a range of them. Some are in commercial vehicle, some are in MSME, and so on. Outside of the two problem accounts that has been reported, which is DHFL and the Reliance Group and Religare, as we look at the rest of the portfolio, it seems to me those are fairly comfortable, and we should not see any negative surprises from them. The next question is around what are we doing with the NBFC? Are we lending to them? Every month we have a reduction of our exposure. We are putting it back. But at the same time, since we are running co-origination program, the effect of that is much more amplified. I think more and more, the way for NBFC for the next 2 years is to concentrate a lot on the co-origination program and build their franchise, and hopefully through this period the liquidity and perceptions change and they are back into the market to fund their balance sheet on their own. So that's really the approach we are taking, of trying to work with a large number of NBFCs with whom we have lent money to develop a workable co-origination program, and that would help them to preserve their client relationship, and it will help us to grow the balance sheet. But the good thing about co-origination is that the understanding of the risk is much more clearer, because there is a direct relation with the customer, there is a direct underwriting, there is direct document. So it's not like taking a share in a pari passu kind of share in a undefined risk.
So on the DHFL, how close are the banks as a consortium on reaching some resolution?
I think the process is moving quite smoothly. I think there's nothing. The real trigger is going to be when DHFL actually brings the partner to the table, the actual offer that is there. And that's the point when we can start thinking about the negotiation and the resolution of the program. So I think right now the banks are all, the ICA and other process are working, but the resolution is depending upon the investment of money. Otherwise, the banks would have to find alternative solutions in dealing with the problem.
And so, if I could ask you on the whole credit growth, how do you see things panning out? Because one hopes that with the various measures and the announcements made in the budget, the credit flow would once again kickstart, because that has been a major concern.
Well, there are pluses and minuses when you look at it. The positive thing, of course, is the interest rates are coming down. Liquidity is expected to be reasonably available, and as a matter of fact, the net RBI liquidity of the banking system is quite high. That's on the positive side. The interest rates are coming down, so there is desire to. On the other side is the economic growth itself and the demand for credit and how that is going to play at the system level. And one is expecting the lower interest rate, the various schemes that have been announced by the government, including, take for example, affordable housing and the concessions that is there. The amount of investment that is planned to be made with respect to the infrastructure, those kicking off, and the NCLT process itself starting to provide resolution. One is hoping that the economic growth will again come back to track, and as that happens, the credit growth will automatically start happening.
Okay. And quickly, sir, if I could touch upon the recap that has been announced in the recent budget. Of course, in the coming quarters, we could see the money flowing back. How crucial element that would be to sustain the credit growth, particularly for the PSUs as a whole, and of course, you being one of the biggest players?
It will be good to get the government funding, because primarily what we are asking for is the gap that has been created by the merger from the amalgamation from Dena Bank and the amalgamation, the differences between the book value. I mean, the losses that have been incurred should actually been reimbursed to us, so to say. But at the end of the day, we are not dependent on a growth on any government, any money coming from the government. We are reasonably okay with respect to capital on and by itself. Second thing is we are planning to go with a direct fundraise through some employee stock purchase plan plus AT1, etc. We hope that we expect we'll have a decent Q2, and at that point of time we can go in for QIP. So the broad message is that the government would decide who would get what, but as a prudent institution, we have to think about being independent and to raise money through a direct access to the market.
And how much is do you expect to the QIP route, and maybe third quarter is when you are looking at?
Right now we are focusing on these two things, the AT1 and the employee stock purchase plan, that cumulatively should give us between 6,000 to 7,000 crores. That's what we want to complete first. If for any reason of regulations or any other approval related issues those don't happen, then we would have to fast forward the QIP. But other things remaining same, get this out of the way and then look at QIP at the next level.
Last question, sir. I'm asking you because we are one of the biggest PSU players. Do you see the corporate credit taking off finally? For various reasons, corporates were not expanding or they are not operating at their full capacities. Any indications of that kicking off?
There's an expectation that the corporate spending would start, capex would start. I do not have enough data to conclude one way or the other. That's indeed happening. So,
but it's still work. It's not.
I still think it's work in progress. It's still not happened, or it's not visibly happened. Maybe there are a lot of plans, but the actual disbursement, etc., has not happened. But one is expecting, as the economic cycle rebounds, the private capex expenditure would start its resumption.
And my last question is on a personal note. Amalgamation will always have its own set of challenges, as you are trying to putting out. Indeed, the smooth amalgamation that happened would also go as a textbook case when it comes to PSUs, because we know that government is looking at more amalgamations. How satisfying an experience this has been?
Well, it has been a satisfying experience, but at every stage when we look at it, the past is good, but we think about what's going to happen next. So there are too many things on a table that we need to work through in this quarter. There are lots of challenges, and I think we have to focus and get it done. So what has happened so far is good, that's nice, but what is relevant is a road ahead, yes.